All right. Good evening, everyone. Thanks for joining us today for this Meet Syfe session. Meet Syfe is really the kind of webinar which should provide you with a good overview of who we are, what we do, and our investment portfolios. I'm Sebastian. I'm a partner at Syfe, and I will be going with you through this today. You can ask questions by using the Q&A functionality as part of this Zoom call. So please, you'll find it at the bottom of your screen if you're on a desktop or also on your mobile. Just put in your questions and we'll try to address as many as possible throughout this session. Cool. That said, I think we are jumping right into it, and we're getting started with a quick introduction about ourselves. So I think everyone knows that investing is really a necessity. We at Syfe, we are an MAS licensed Singapore headquarters digital wealth platform, and we are trying to build the next generation of financial solutions to help you to invest better and achieve the goals you're aiming for. Very quickly, just like 30 seconds on a bit on like what we have achieved so far. I think we are very proud that more than half, or almost half of our new clients are referred by existing clients of Syfe. I think that shows like how satisfied our clients are with our service. We have clients from 18 to 93 years old. So we're really like trying to cater to clients of all ages, catering for their different goals and really helping them to achieve them. We are Singapore headquarters. We are also focusing mostly on Singapore, but nevertheless, we have clients across 42 different countries. And as a result, we have, or that's one of the reasons why we have been able to grow our assets really fast. So we grew like 4 times in the first half of this year. If you go to the App Store and you check the finance category, you will find the Syfe app in the top 10 of the finance apps, together with all the large banks like DBS, OCBC, and so on. Again, showing how much like clients we've attracted so far. We have a 4.6 star review on Singapore's largest personal finance community called Seedly, and we have also been awarded the best digital advisory solution by DigFin earlier this year. We are having really great backing from investors who invested more than $50 million in the last 2 years into our company, helping us provide and build great financial products. Just a few words regarding our license and also like 2 of our partners we work with. We are having a retail fund management license. That is a license which is granted by the Monetary Authority of Singapore, or MAS, and comes with stringent requirements by the MAS in order to be awarded this license. We are also an exempt financial advisor, so we are also allowed to give financial advice in regards to our portfolios, and all the funds, all our client funds are always strictly segregated from our company funds. So there's no commingling of client and company funds at any time. When a new client funds a portfolio, these funds go into the so-called DBS trust account. And from there, we invest them through our broker, Saxo Capital Markets. That said, this was a quick overview of the company. Now I want to go into a bit more, I want to provide a quick overview of the different portfolios we offer before we go into each of these portfolio in a bit more detail. With me, there is Wilson, one of our wealth experts, and he will help me a little bit with answering your questions. So he might answer some of your questions directly in the Q&A tab, but he will also like pick up some of them and will answer them live verbally. So starting from left to right, I want to start with the Cash Plus portfolio, which is our cash management solution. This is a proposition for people who want to park their cash for a few months or longer and have a higher yield than in their bank account, right? So we are currently projecting a return of 1.5% per annum. There are no lockups, no limits, or no tiers. We'll come to a bit more, we'll cover it in more detail in a little bit. REIT Plus is our real estate focused portfolio, highly popular among our clients here in Singapore. And it's really about creating passive income as well as portfolio growth. Our range of core portfolios should really be, as the name suggests, the core of everyone's portfolio. This is a highly diversified portfolio across asset classes, geographies, as well as industries. And we'll cover this in more detail later as well. And our latest addition to our portfolio lineup is Syfe Select, which is really the kind of portfolio which allows you to customize and personalize your investments with Syfe. You have the choice between some pre-built themes as well as completely DIY, build your portfolio from scratch. Let's get started with, sorry, like that's a good point. Let us quickly do this poll. Which portfolio are you most interested in? Please click on one or multiple, and then we'll make sure that whatever has the most interest, we will cover also in most details. If everyone has voted, let's see the results. Wow, a quite equal distribution across the investment portfolio, slightly less on the Cash Plus, but a very high interest in all the investment portfolios. All right, we'll make sure that we go over Cash Plus maybe slightly more quickly so that we have a little bit more time on the investment portfolios. Wilson, do you want to share how a joint application for our platform works?
At the moment, we do not have the joint application. So for investors looking for that, they can actually use multiple portfolio within one account to actually invest into different type of portfolios that depends on what are the goals that they're actually looking at.
All right, cool. Great, then let us go into Cash Plus, and then we'll take a bit more time to answer a couple more questions. So Syfe Cash Plus, really about making your savings work harder, right? I think we all know that interest rates in banks are at an all-time low. The average bank interest rate is somewhere around 0.05%, which we all know doesn't even cover inflation. So we came up with Cash Plus, which is still an investment product. It's not a bank account, which provides a higher projected return of 1.5%. So at least you can make sure that your savings are not losing value due to inflation over time. What are the highlights? As I already mentioned, currently we are projecting a yield of 1.5%, but we are frequently actually achieving a higher yield than that. So our yield year to date is actually closer to 2% per annum, so significantly above what we are projecting. There's a daily accrual of returns. That means you see the value of your portfolio change on a daily basis. Your portfolio gains are not added once a month, similar to like your bank interest rates, but you will see them accrue on a daily basis. You can very conveniently transfer funds across different portfolios, and you can even set up automatic recurring transfers. So just as an example, if you want to use DCA, if you want to DCA dollar cost average into let's say the REIT Plus portfolio, you can do a lump sum transfer into Cash Plus and then set up an automatic transfer on a monthly basis from Cash Plus into the REIT Plus portfolio. There is no minimum investment amount. There's also no limits. So there is no limit, no maximum you can get this 1.5% projected yield on, right? So regardless if you put in $1, $100,000 or $1 million, you will earn the projected yield of 1.5% per annum. There's also no lockups. So unless a fixed deposit where you need to keep the funds for a certain period of time, with Syfe Cash Plus you can withdraw funds at any point in time. And there's unlimited withdrawals. So there's not only that there's no lockup, but you can also decide whenever you want to withdraw, and if you want to withdraw every week, then that's also possible. What is what are the underlying securities in the portfolio? So there's a roughly equal split across 3 different constituents: the Lion Global Money Market Fund, the Lion Global Enhanced Liquidity Fund, and the Lion Global Short Duration Bond Fund. I don't want to go into all the details here, but basically all of these have in common that they are investing, or that all of those are built using high quality bonds. On the money market side, mostly like government bonds, as well as commercial bills and deposits with financial institutions. While on the short duration bond fund, this uses investment grade corporate bonds, right? This mix basically provides you the 1.5% projected return, which we have already covered extensively. One thing which makes this high return possible is that we rebate back 100% of the rebates which we are receiving from the fund manager, and we are not charging a management fee on these portfolios. You will see that we are charging an all-inclusive management fee on the investment portfolios, but not on our cash management solution. How does this compare? I don't want to go into all the details here, but as you can see for yourself, I think it's really highly attractive, with one of the highest, or probably the highest projected return, and no deposit requirements. So there's no minimum which need to be invested, but it can be any amount. That said, and before we want to go into REIT Plus, are there any questions, Wilson?
Yep, actually, previously you mentioned regarding dollar cost averaging. So we do have a question by our viewer asking if they are able to actually invest doing like an ad hoc solution, like as and when they like. Do they have to stick to a dollar cost averaging method?
Yeah, that's a very good question. Yes, so there's not only unlimited withdrawals, but also there's no limitation to when and how much a person wants to fund their portfolios. So this does not only apply actually to Cash Plus, but to all our portfolios. Anyone can put in any amount at any point in time. We are often recommending to have a fixed schedule, right? So that it's not used otherwise, but still within your plan to invest. But there's no limitation from our side.
All right. So maybe one more question before we move on. One of our viewers asking, is there any risk in Cash Plus portfolio? Is it possible to make a loss in that?
Yeah. So as I mentioned earlier, there is Cash Plus is an investment portfolio. It's not a bank deposit or something like this. So therefore, it's not like SDIC insured or something like that. But the underlying securities are bonds of the most creditworthy institutions and companies. So there is a very, very low risk, right? And I think what we do recommend is we recommend Cash Plus for everyone who has an investment horizon, which is at least a few months. So if you want to invest it for a couple of days, then there is a small risk that it could go down by a tiny little bit. But so the portfolio will fluctuate a little bit on a day-by-day basis. But so far, we have not had yet even a quarter where the portfolio would have not yielded a positive return. So generally, it's very continuously going up. And for example, even the Evergrande situation in China has not affected the portfolio. It has not led to any drawdown of this portfolio.
All right.
So as I mentioned earlier, so far we have always delivered higher projected yields than the 1.5% which we are projecting.
All right. Thank you, Syfe. Maybe we can move on to the REITs one.
All right. Syfe REIT Plus. This is still the first as well as only investment portfolio which allows you to invest in the iEdge S-REIT Leaders Index. This index is built by iEdge, by SGX, so by the Singapore Exchange. And this index, tracks the largest and most liquid REITs, real estate investment trusts, listed on SGX. It has strong capital appreciation, as well as an attractive dividend yield of 5.1% in 2019. Actually, it is a bit outdated numbers, but in 2020 it was 4.5%. And for 2021, we are again estimating a dividend yield slightly above 5%. How is this index being built? There is many different factors which go into building this index. This index is not built by us, as already mentioned, but by iEdge, and it uses FactSet's RBIC's classification to select the individual REITs, and they're screened for free float velocity, and none of the REITs has a higher weighting than maximum 10% of the portfolio. So making sure that it is a well-diversified portfolio. And there is a total of 20 different REITs in this portfolio. What are the REITs in the portfolio? I think it's all pretty much like household names, right? I think all of you would know most of the, or probably all of the places which are shown here on the right side. And these are the kind of properties which are owned by these different REITs, like shopping malls like Vivo City, Plaza Singapura, Changi's Business Park, so like office space, as well as there's data centers in there. There's other commercial or industrial real estate in there as well. And you can see the largest 10 here on the left side. As I said, there is a cap of 10%. So if over time a certain REIT grows more than something else, it can go slightly above 10%. But every rebalancing, which we do twice a year, will set it back to the 10% maximum weighting. There are two options when you want to invest in the REIT portfolio. There is the 100% REIT portfolio. It's just 100% basic. It tracks SGX's iEdge S-REIT Leaders Index and has annual returns of 10.7% over the, like it's an average over the last couple of years. Oh no, sorry, this is 2020, and the dividend yield of 4.5%, as I already mentioned earlier. There's an alternative option, which is the so-called risk-managed REIT portfolio. This blends REITs with Singapore government bonds. That helps to reduce volatility and make the portfolio more resilient in case of a market correction. So depending on how much volatility there is in the market, we will change the share of Singapore government bonds in the portfolio. So there will always be a minimum of 50% REITs in the portfolio. It can go up all the way till 100%. But the other part is basically Singapore government bonds. That means that the annual returns and the dividend yield is a little bit lower, but there will be less fluctuations in the portfolio. So for people who are a little bit more risk averse, this might be a great option. Yeah, before we go into the core portfolios, Wilson, do we have some questions?
Yep. So one of our viewers is asking, right? Does Syfe do any sort of rebalancing for our REITs portfolio?
Sorry, how often we rebalance the portfolio?
Yeah. So do we do any sort of rebalancing?
Yeah, so we rebalance in line with the rebalancing of the index. So twice a year, I think recently it just happened 2 weeks ago actually, there is an update to the iEdge S-REIT Leaders Index. And at this point in time, we would also rebalance the portfolio in order to be always replicating exactly the index. By the way, maybe just an important thing to add is all the rebalancing or any brokerage or trading fees are already covered in the management fee which we are charging. So there is no cost attached to this rebalancing.
Right. We can actually move on to these core portfolios first, then touch on about the other questions in a later portion. Yeah.
I think yes, sure, we can do that. I see a lot of questions coming in. Don't worry, we'll answer as many as possible towards the end of the session. Yeah, we want to talk about core portfolios. When we talk about core portfolios, this is not one portfolio, but there's actually 4 different portfolios. These portfolios are highly diversified, low-cost passive investment portfolios. Let us go into a little bit more details. So what we are focusing on is we want to have a highly diversified portfolio, but we also want to have a relatively stable asset allocation. So this asset allocation will, similar to the REIT Plus portfolio, change only a maximum of twice a year. And there can be these changes can be relatively small. There is a certain China focus in the portfolio, but there's also a lot of other geographies covered well in the portfolio. So this really covers everything from the US, developed markets such as Europe or Japan, as well as emerging markets like India, Indonesia, Brazil, etc. It's because of the stable asset allocation ideal for dollar cost averaging. So because we are not frequently buying or selling assets, you can really like basically if you dollar cost average, you can make sure that you will really like have not unforeseen sell or buy orders which you weren't which you wouldn't want if you dollar cost average. And we really optimize for long-term returns, right? So we're using a smart beta strategy or factor investing strategy in order to maximize the long-term returns. What is in these portfolios? Here on this slide, you see all the different ETFs which make up the portfolio. As you can see, there's 3 different asset classes in the portfolio. There's equities, also known as stocks, bonds, as well as gold. As I already mentioned earlier, there's a wide diversification in terms of geography, but there's also a wide variety of different industries. And you can see this here on the bottom left under the smart beta section. So there is healthcare, there's consumer staples, there's technology, there's utility, so a wide variety of different industries, as well as small, mid, and large cap stocks. So this means like smaller company all the way to the very large companies. And also important, there is a certain allocation to gold. So in markets like currently where there's quite a bit of volatility, gold can really help as a stabilizer within the portfolio. I think one important part, and I think a question which we get very frequently is regarding US withholding tax. And we are really like choosing ETFs to make sure we optimize for withholding tax, but also for other factors. And here we show an example where we go once with a so-called UCITS ETF, which has a lower withholding tax. But then we also show an example here where we pick the US listed ETF, which has higher withholding tax, but is still beneficial for the client. So we from Syfe, we have no preference over a specific ETF over another, or a specific fund manager over another. We will always choose the ETF which is beneficial for our clients. So to just share this one example here on the left, for the S&P 500, which is the 500 largest listed companies in the US, we are using CSPX, which is an Ireland domiciled so-called UCITS ETF. There's 15% withholding tax instead of 30% withholding tax for the US equivalent. But in the case of NASDAQ 100, where there's the QQQ and the EQQQ option, the later one is the UCITS. And as you can see in this table, has a lower withholding tax than QQQ. But because the management fees are different between the two, it still benefits, the benefits of EQQQ are offset by these higher management fees. So the advantage of EQQQ is only 0.03% when it comes to withholding tax, but QQQ is 0.1% cheaper than EQQQ. So it's beneficial to go with the US listed ETF. So I think we're bringing this example so that it's not only the withholding tax, which can be, which should make the difference. Also, often US listed ETFs have lower spreads and higher liquidity than their UCITS equivalents. Yeah, and before we go into select, I think we should take a little bit of time again to answer a couple of the questions.
Yeah, sure. So, you mentioned about dollar cost averaging. We have one viewer that is asking how should they go about doing it, and maybe you want to explain a little bit more about that.
Sure. So dollar cost averaging, for everyone who is not familiar with the concept, means that you frequently in a fixed timeline put in funds into an investment portfolio. So that could be that you put whatever, when you receive your salary on the 25th of the month, that you automatically on the 27th put $1,000 or $2,000 or whatever is the amount into their portfolio. Why does this make sense? Or why can this make sense? I don't think it makes sense always, but why can it make sense is that it basically reduces your risk, is a way of yourself reducing your risk. Maybe the market has a significant correction in 2-3 months from now, then obviously it's good if you haven't put in all your money right away, but you put it in it every month. So you will take advantage of the lower prices in 3 months, right? And you buy at least lower price, right? And and so this basically allows you to not need to be worried, if there's a correction or not, right? You just get started right away, and you put in a fixed amount every month. If the markets are going up, it's great. Your investments become worth more and more over time. In case there is a correction, you benefit from buying at the lower price, and because you're investing over the mid to long term, you will benefit from the subsequent recovery. Does this explain it well, Wilson, or is there anything you would like to add?
Yeah, I think that's explains pretty clearly. So maybe you want to sum it up, in terms of current market situation whereby it's actually pretty negative. Would you still recommend or advise the clients to actually just continue the dollar cost average, or do you think that waiting out would be a better option?
No, I think in the stock market we have seen a little bit of a correction in the months of September, but I think nothing out of the ordinary. So I think if your plans haven't changed, if your goals haven't changed, we encourage to just continue and be disciplined about this, because actually in a way it's kind of like what you wanted. You will be able to now buy at a lower price than you did 2-3 months ago, and really then benefit once the market will pick up, right? And no one knows exactly when the markets will start to grow again, but you don't want to miss out on that opportunity.
Yep. All right.
And I think that also applies to REITs, right? I think this year is to a certain extent a challenging year for Singapore REITs because of lockdowns and so on, right? But I think it's very hard to time. It's almost impossible to time exactly when to invest. So there's a lot of data which shows that those who just are disciplined and just staying invested actually have the best returns in the long run.
All right, awesome. Thank you, Syfe. So we can actually just move on to the Syfe Select.
Sure. Syfe Select, as I mentioned, is really like the latest addition to our portfolio lineup. there's two options. There are themes and there is custom. And both is basically there to really allow you to express your views and to basically tailor your investments to your views and to your needs. Themes provides you with 5 different ready-made portfolios based on structural megatrends. We'll see them in a second, but these are examples would be ESG, right, and clean energy, right, and similar trends. You can add or remove ETFs from the preset list, so this can also just serve as a starting point for your investment. And you can adjust portfolio allocations based on preference. So if you believe that a certain part of the portfolio is taking a too big share, you can reduce it or also increase it if you think it's too little. Custom portfolios, as the name suggests, are really like 100% custom. You can start by selecting up to 8 ETFs from a curated list of more than 100 ETFs and build your own portfolio. How do we select these 100 ETFs? So there is more than 8,000 different ETFs on the market. And I think it can be quite overwhelming to choose from all of them. So what we have done is we have carefully curated a list of 100 ETFs by rigorous screening for making sure that they are low in cost, that there is high liquidity, meaning there's a lot of trading volume, which allows you to basically, like buy and sell without a big premium or discount, right? They are by the most reputable asset managers in the world, and you can see some of the logos here on the right side. And we had many of them as guests in one of these webinars before. I'm sure some of you remember Rebecca from State Street talking about the advantage of ETFs in general. We did a session about ESG with BlackRock just recently, or just last week we had Venek talk about esports and gaming, which I found quite interesting. And yeah, and we make sure that the ETFs which are there represent all the major asset classes out there. They cover all the mega trends, the different sectors as well as the different geographies. And with this, we basically come up with a list of 100 ETFs. And this you can use to, and this we used for our themes, as well as you can use to build your custom portfolios. So what are the 5 themes? There is ESG and clean energy. There is disruptive technology. There's healthcare innovation. There's global income, and there's China growth.
Seb, yeah.
Maybe just one sentence on each of these portfolios. The name is probably relatively self-explanatory, but yeah, just one sentence. ESG and clean energy is divided into 2. Half of the portfolio focuses really on ESG, which is environmental, social, and governance. So companies which are really rating really high on these factors, and historically have shown that they're actually performing really well. So people who are like companies who really pay attention to those things perform better than other companies who might not take it, who might not take this as serious. And the other half is really focused on clean energies. So companies which do build products and services supporting our transition to clean energy. So away from like oil and gas, like natural resources, to renewable energies. Disruptive technology is a portfolio which really tries to leverage the shift towards technology, towards online solutions, and so on. So it really like basically invests in innovative companies who offer services leveraging technology. I think healthcare innovation, I think this pandemic has shown, you know, how important and how important healthcare as a sector is overall, obviously, but it also has shown how much innovation is happening in this sector, right? How fast companies were able to develop a vaccine and so on. So by investing in the healthcare innovation portfolio, you will be investing in those companies who develop those solutions. Global income is a high yield portfolio, above 5% yield, like dividends per annum. So in really investing in corporate bonds, high yield bonds, and so on. And then there is the China growth portfolio, which is really like investing in the companies which drive China's growth. So not only technology, some of the names you might see here, but also more traditional companies in China. How does it work? So I think on custom, you're not picking any of these themes, but you basically can really like build it yourself from scratch. So you will start on this left screen. You can either go for view all and then go through the whole list of 100 ETFs. Obviously, you have a search functionality, but you can basically go through all of them and filter by asset class, geographies, and similar filters. But you also have the option to go and use these other categories which you have here: trending, recommended, top performers, bottom performers. And whatever you choose, you'll basically present it with a list of ETFs. And by clicking on them, you will get a lot of information, as you can see here on the right side, right? So this is, for example, the ARC Genomic Revolution ETF, and you can see how did this ETF perform historically. So first of all, there's a description. It tells you which asset class, which risk rating it has, what geography it focuses on, as well as what sector. You see the top 5 constituents, as well as the top 3 sectors, right? On the right side, you see historical returns, as well as on the bottom right, the allocation by country. If you think this is great and you would want to add this to your portfolio, all you have to do is click on the add button and you will come to a screen which looks roughly like this here on the left. So here we have already added 4 different ETFs with an equal weighting of 25% each. You can very easily adjust this by clicking at the small edit symbol next to the percentage. And you can, you're free to choose a minimum of 2 and a maximum of 8 ETFs. And you can also then review the portfolio what would, in terms of composition, yeah, you can see how is the asset class composition. What are the biggest companies in these ETFs? How is the composition in terms of sectors or countries? I think that's quite a powerful feature because there's actually a lot of ETFs who have a lot of overlaps. And this really allows you to see, do you like the composition, or is there maybe a bit too big overlap in a certain sector, which you weren't aware when you were looking at just the individual ETFs. And you also see the combined past returns. So this, the returns you see there is basically how would be your return if you would have basically invested in those four with this certain weighting over the last couple of months or years. The history goes as far back as possible. Some of the ETFs are relatively new, so then there's a little bit less history, but some others, they go back 10 years and more. And we'll also provide an overall risk rating, right? So in this example, the risk rating is 4, which means high risk, which brings me to another point. So we recommend Syfe Select portfolios as a so-called satellite portfolio. So we think a lot of the the majority of the funds should go in core portfolios, which are highly diversified. But then if you have strong opinions that certain sectors will do well, you can build them using Syfe Select. Yeah, and then you basically finalize you confirm the portfolio, you're happy with the allocation, and you can basically fund the portfolio. You can give it your own name, as well as how much do you want to put in lump sum initially, and how much do you want to do on a monthly basis. This is obviously completely optional. Yeah, and then maybe just one word about the core satellite investing strategy, because I just mentioned it, right? So we recommend to have a core using our core portfolios, like a diversified portfolios as the core of your investments, and then build satellites using REIT Plus, Syfe Select Customer, Syfe Select Themes in line with your specific needs or preferences. Yeah, very quickly, I mean, you can download, so I think we have covered now Syfe Select. I think now we're going into just 2-3 slides about Syfe in general. Syfe is available in through your web browser, but also in the App Store, Google Play, as well as the Huawei App Store. When you get started, you will answer a couple of questions, will help us to recommend you a portfolio. You will have access to a lot of information in terms of what is in the portfolio, what is the historical returns, what are the fees. You can even use a forecasting tool in order to estimate how much your investment will grow over time. And all of this before you have to decide if you would want to invest or not. Once you have made the decision and you're investing, you'll be able to easily monitor your portfolio on a daily basis, either through the mobile app or on the web. What is the pricing? We start with 0.65% per annum without any minimum amount which has to be invested. That would mean that you would, if you invest $10,000, your monthly fees would be slightly above $5 only. If you increase that to 20,000, you would be fall under the so-called black tier, which reduces the management fees to 0.5%. with a minimum of $100,000 to 0.4%, and above 500,000 it's 0.35%. Cash Plus, as I mentioned earlier, we are not charging any management fee, but it's also not included in your overall assets when we calculate your Syfe pricing tier. A quick comparison between Syfe and DIY investing, like if you invest completely on your own. Syfe has no minimum investment. For a lot of DIY solutions, you will have to put a certain minimum depending on how you invest and what you invest in. You do not require a CDP account. The time required to set up an account is less than 3 minutes, and you can use my info. You have advanced risk management in the REIT Plus portfolio, for example. We automatically rebalance and re-optimize your portfolio twice a year. And something which I think is particularly interesting is automatically reinvest your dividends. For those of you who have invested yourself through other tools, you know that sometimes it's very hard to invest dividends because you get the $200, $300 dividends. It's very hard to actually invest them. Management fees starting as low as 0.35%. This is a minimum of usually 0.5%, but in many cases much higher than that, 1.5% to 2% when you invest in, for example, unit trusts or similar things. I quickly want to share about our Syfe Wealth Expert team. Is a team of wealth experts like Wilson. Wilson is not yet on this picture, but our wealth experts will help you to review your current investments, plan for future goals, and really help you to understand investment options with Syfe in more detail. You can very easily schedule a consultation or a call through our website. So when you go on our website, syfe.com, you go in the advisory section, you will be able to schedule a call, and one of our advisors will call you at the chosen time. Yeah, we have a couple of exciting webinars coming up. Next week, there is a webinar together with Dollar and Cents talking about market opportunities and mega trends. And the week after, we are covering core satellite investing, right? So really, there you can really learn how to build your own portfolio. And I think also very interesting topic. Yeah, and while we share here a couple of these promo codes, we have time to answer a couple of questions. So two different options here. You can invest up to 6 months free, up to $30,000, or you get a $20 cash bonus with a minimum investment of $1,000 using the code on the right side. Wilson, what questions do we have?
Right, we do have one question. So for Syfe, do we actually rebalance a portfolio based on current market situation, or do we have a specific timing that we actually rebalance the portfolios?
Yeah. So the portfolios are rebalanced twice a year. This follows a rule-based quantitative strategy. So there is not an active management where someone decides, I want to buy this stock and we want to sell this stock. Or this is rule-based passive strategies, and we optimize or rebalance them twice a year. I see you have answered a lot of questions directly already by answering them in the Q&A tab. So we'll move on to this one. it would be really great if you could give a short feedback about this question by scanning this QR code. And yeah, I think that would be very helpful for us to improve the session for the upcoming ones. Yeah, with that said, we are coming to the end of the session. I see there are some more questions coming in. Yeah, if you have already started investing with Syfe, you can still use the code if you haven't used a code so far. So if you have already used a different code when you signed up, you won't be able to do. But only if you haven't used any other code yet. There is one question regarding the market, right? I think so the question is a little bit about asking about recently we have heard a lot about that there is markets are going down. It started with a bit of regulatory issues in China, followed by some mediocre news in the US, as well as the Evergrande case in China. And I think yes, there was a slight market correction in the months of September. But if you look at, I think what we offering is medium to long-term wealth management, right? So we are not I think for us, what we are offering is solutions for people who want to invest for a few years. But even if you look since the beginning of the year, right, markets are up, right? And yes, markets were up close to 20%, until 1 month ago. And since then, markets have declined by about 5%. So if you look at compared to the beginning of the year, you would still be up 10 or 15%. So I see it more as an opportunity to buy rather than anything else. I would not recommend, without knowing the specific situation, obviously, to make any big changes. I think it's completely normal that the stock market goes, fluctuates and goes up and down. But I think the stock market over the last 150 years has shown that the long-term trend is up, right? And I would not be too concerned. I would stick to your goals and to your plan and continue to invest.
All right, thank you, Seb. I think the takeaway here is that no matter how the market is actually performing or reacting, it's best to stay invested. And if you actually have an investment plan when you started out investing, it's always good to just stick to that and go back to why you actually started investing, right?
Exactly.
All right.
Great. I think that was a great closing statement. Thank you very much, everyone, for attending. Thank you, Wilson, for helping me with this session today. And yeah, I wish to see everyone in one of the upcoming webinars. Thank you and have a good evening.
Thank you, everyone.